All right, guys, Sam back with you here, staying with our theme today of market geometry and how we can combine the algo relationships that we're looking for, the algo fib pulls, the Elliott wave structure, and the market geometry working with Andrew's median lines, or as they're commonly called, pitchforks. This is a great example here, and I've got two to show you that really, I think, make the point here for you that I suppose it's indisputable evidence is what I would propose to you. So given that what we see here, so we can see an Elliott count here. It's a little tricky here in the first. So here, let's open this up. So this is Potcoin to Bitcoin on the 4-hour on Poloniex. So we get, from this low here, we had this long downtrend, and we get a good low here. This is our lowest low down here. And then we get what looks like it's going to be an impulsive structure. But we fail here on the 5th. So by my count, what we have here is a truncated 5th wave into a leading diagonal. Right, do you see that? So 4 overlaps the 1. You'd be expecting at least 100% in the 5th, but we don't get it. That's what we get. So my sense is that we get a truncated 5th, and that because these were just spike wicks with the bodies here, I think this is reasonable that you could at least keep this as one possible scenario as we come down in here to potentially put in a 2. So if we allow for that to be a truncated 5th, I'm going to pull from what is the 5th. We take note of where we go here. We get right into the little box here. We get a little tick or two through it, but we're in that high probability zone that we often look for in the 61865. I've shown it hundreds of times to y'all. Okay, so given that, all right, so if I've got a truncated 5th here and a leading diagonal into a 1, well, then I'm looking now on the larger degree here. I would have this. I would have 1, 2, potentially 3, 4, 5. Right? So very, very bullish scenario here, implying potentially much higher prices here. 1, 2. Right? So it certainly plays. Now, how about structure? How about market geometry? Well, since we've got this marked out, you can see what I'm after here. This would be our significant swing 1 high here. You can see the 4 held it. Well, there's a few things to look at. All right. So first, when we're coming down, right? So I get 3 good pivots here. So whenever I've got 3 good pivots, we're always going to put a pitchfork on it. Right. So I'm going to go from here. I'm going to go to my low. I'm going to go here. All right, so I've got on this, so if I were to take you to where you would start it with a default, if I have the original on there, right, well, we don't get near it. It's too steep. So I'm going to go check my alternates. I'm going to go to my shift, and that looks pretty good. Now take note of what happens. So we get the corner pocket trade, right? From that pivot, right? Don't need those just yet. From that pivot, I know that if I've got a good pivot here, I've got an 80% probability. That's median line trading principle number 1. With 3 pivots, we have an 80% probability of making the median line. And we tick it, we tick a little bit through it, and then we move away. Now, note what happens here. We go up, we don't make the upper channel here, and then we start coming back down again. So if I were drawing potentially as an AB, right? So this would be A, B. We go right into the pocket, right? Do you see that? I mean, I don't know how many hundreds of times I've shown it to you. Right into the pocket, the 61865. Here's the algo target. Well, it gets a little shy, but in addition to that, right? Take note of this now. In addition to tapping it here, going to the 618, not quite making the negative 23. They don't quite get there. We also do not get to the median line. Right? The expectation is that you're going to come down and reestablish that median line as a target. We don't get there. Well, we know from median line trading principle number 4 that a failure to reach the median line sets up the potential for the market to move in the opposite direction equal to or greater than the prior swing. Right, which would mean that we would be moving, I have to use this, we would be moving equal to or greater than the prior swing. So if I pick from that low, we go almost to the tick. If I've got it right, almost to the tick. All right, so there's my pivot. We get just a few shy of it, right? Just a few shy of it for this big spike here, equal to or greater for our potential one wave. The tell being that we don't make the median line here. That's what implies the bullishness here. So if you were looking at that, wondering, okay, is my 2 in? Is my 2 in? Well, this, when you see this action, well, that's a clear tell. So let me take that off. Okay, so we don't need this anymore. So we have potentially now, I don't need this anymore. I've got potentially now a 1-2. Well, if I've got a 1-2, what am I looking for? Well, I'm looking for my third wave. So I get a very deep second wave. But I'm going to measure it. So I'm going to go for my 1. We get, almost we put in a new low, right? So here here's the negative 23. We get there, hit some targets. To and through, they get to the negative 100. Now let's consider that relative to our absolute 1-2. So if that's our 1, this is our 2, right? Well, we're looking for at least 100%. The likely target here for a third, right? So for a third would be between the 618 and the 75. Look where we go, right up to it. So potentially there we get a 1, 2. There's the 3. 4 holds the 1. Let's check that relationship from the 2 to the 3. Look at that. We go right to the 50, wick, 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 boom. We don't quite make it, but we don't know that it stopped there. We don't quite make the negative 23, but we get right in the box there. Right in the box for the likely 1, 2, 3 relative to the larger degree. So potentially, we've got a 5 in here. We don't know for sure yet. Potentially, we've got a completed impulsive structure into a third wave here. Do you see that? Now, in addition, of course, I'm going to look at, because I've got pivots again, I'm going to look at my median lines. So I'm going to go to my 1, I'm going to go to my 2. Well, that's not doing much for me because I've got the alternate on there. I've got the shift. I'm going to go to original. Okay, so take note here. We get here, so here's the first one. Here's the first corner pocket. We've got an 80% probability of making the median line. Okay, so from here, we don't make it, and we come back down. Now we go again, we don't make it. Finally, we get here. We finally make it, right? So as a 1, 2, looking for potential third, not only we get to it and we get through it, then we hover, then we come right back to the outside parallel here, to the lower parallel to those medians. So then looking at that, I would think, do I want to look over here? You know, I would, it's kind of a, a little bit of trial and error to get a handle on where we are. This looks to me like this fits better because note here, so we get it again, right? So here's the 50 here, right? Here's the target, median line, to and through. And we're to and through and now challenging the upper side of it here. Do you see that? So this is perfect pattern here. So we have a perfect 50% for a wave 4. We hold the wave 1. We hold this wave 1 actually as well. We tap, tap, tap. So we've got the market's geometry. We've got the probability of getting to the median line. We've got the Elliott wave count. And we've got targets up here, both relative to the wave structure as well as the algo target up here at negative 23. High probability that you've got a good third wave in play here. And nothing says we stop here, right? But that is certainly a high probability target. So do you see how combining these elements, right? You got to learn how to do this because it's just how the market moves. So again, with that as a potential. Now, just because I've got that, I also would want to, I'm going to take this off so as not to confuse the chart. Take some of this off and just strip it bare again. I mean, so the other thing, you could always just put a channel on it, right? So that's another thing you can look for. So a channel is going to look very much like a modified shift. I think I've shown this to you guys before. Now take note what happens here. So I'll pull the channel off to make the point here. So from this corner pocket here, because I've drawn it again. Remember, we had the prior draw. Now, note what's happened again, right? So we've got an 80% probability of making the median line. And we do it yet again. So we had this draw. Now I've drawn it again from the other two pivots. So I've gone from, so even if I go to the 2 low, right? If I go from my 2, 3, 4, bang. right? We know Andrew's median line trading principle number one, the market often will make a pivot, a significant pivot at the median line. And look where we go, right? So do you see that? So we've got the combination of the hot box that we drew of the 618 to the 1618 to the 175. Then pulling from my 2 to my 3 to my 4, I get an 80% probability of making the median line from the corner pocket, which we also know was the 50% from the 2. Right? Do you see how we're just combining things here? How we're just combining these elements? I mean, that's just a gorgeous technical trade, right? You've got everything working for you there. Pattern, price, geometry, structure, fib relationships, fib retracements, external projections, alternate price projections. They're all in play there. And you see this in the markets all the time. I mean, all the time, right? So algos, if they get 3 pivots, this is going to be, they can program the software. Think about, the complexity of what they're trying to do. So that's why this seems like, oh, that's relatively simple. You'd think algos seems like they'd be more complex than that. Well, there are algos of all types running on all sorts of different degrees and with different objectives. But for the base, and particularly, on the larger swings, for swing trading, this is how they do it, right? And you can think about it, could I write code that worked from 3 pivots and then gave me a median line? Yeah, you can imagine how that would be the case. All right, so if indeed, all right, so we've got structure here. It's not to say that, oh, you've missed all the opportunity here, because if we've got a good third here, we're looking for our fourth. Do you see that? So if I pull all of this off, well, now we don't know that we're at the top there, but let me clean it up, right? Because we know algos, they're going to want that target. They want that. Now we've had a pullback from it, so they got a little shy of it. But that certainly, they will front run at times, but that doesn't necessarily mean that there's not another push to come back to it. So if we've got a 2, 3, right? Of course, you've seen it 100 times, so you know exactly what I'm going to do. If that's a potential, if that's our top, and we're going to stay shy of the negative 23, we're looking for the 4. So let me pull this one off. 3, 4. Where are we looking for the 4? Well, I would certainly pay attention to this as prior resistance. And we know that the likely targets for a 4 are 38 to the 50. Right, so that all looks like it's potentially got structure to work with. Right? Do you see that? So it's just that combination, and it's doing the same thing over and over and over again. The same thing to every chart that you pull up. Look for the geometry. Look for the algos to be there. You can always spot their footprints. You spot algos. Keep this in mind. You spot algos not from the 50%. It's from the target. That's the tell. When you're seeing pivots at the negative 23, the negative 618, those are the tells. The 50%, any novice trader is going to be looking for the internal fib relationships. That's rudimentary. How do you know they're in? It's the target. It's the turn and the pivot at the negative 23, as I've shown you many, many times. That's the tell that they're in play. They're in there. So here now, of course, we know that they're going to want to buy it right there. And where's their target? Right? Do you see that? So, we're combining things. I'm not sure I always make that clear. So there's the target. But in conjunction with that, so that's the algo target. But in addition to that, we're combining the Elliott wave target. Because if this is my 1 wave, projected from my 4th wave right here. Look, see, so I get confluence up here. There's the 1272 as a potential 5th, which is lining up. So I get a confluence zone here. And of course, we'd be drawing a pitchfork on the whole thing. So with that in mind, I'd be drawing it this way, just to keep an eye on it. If I've got a completed 1, and this is my 2. I want to pay attention to what happens when we come to that larger geometry. When we come back to the median line, are we gonna pivot here? Right? Are we going to turn on the 4 on this here? That's certainly plays, right? Prior resistance here, potential top offering prior resistance, offering some support. Here's the 38. Here's a very, very reasonable buy area right here. Right? So if we get that case, and we can't confirm this pivot yet, but if we were to get that, and we're a buyer here at the 38, front running just a little bit ahead of it, okay, we could put a stop. Oh, well, this is really relative to your risk tolerance here. But if you put a stop just a few below the 50, well, there's 3.5 to 1. You know, if you want to be tighter on it on the assumption that they're not going to take out this prior resistance, well, you tighten that up, right? And you say, okay, well, if I'd rather get stopped out and then look for the entry down here. Or, you know, really even down here, because then this still is in play, but now you're going to put the outside channel, the 200 goes on and the 2.5 goes on. I don't have the 2.5 here. 2.5, 5 goes on. You see that? Okay, so I guess that would be 1.5. So let me get that hot again for you. So we'd put in, I'd have the, where's my 1.5. 1.5. There it is. Okay, see that? So potentially you've got the 1.5, here's the 2, 2.5, 3. So those are the dominant pivots, right? And we can see how it's responded when it's gotten to and through. That's the geometry the market's responding in. And then I've got my Elliott count to help define that. So again, looking for alternates. So first here, potentially here, potentially here. Right? Those are all. So the question is, you know, if you want to be a buyer here, do you want to take that kind of risk? Well, now I'm at 2-to-1. I don't. No reason. If I'm operating on the premise that we're going to stay in that high probability zone between the 38 and the 50, the highest probability for a fourth wave, why do I want to ride this down any lower? Even though it's technically valid here, I just don't want that much risk. I don't want it. I'd rather take the stop here and then look to reload based on, you know, am I getting an A, B, C? Am I getting fib relationships there? Is there a pitchfork? I mean, you know, when it doesn't have to be, you can pull from any 3 significant pivots. So I would be doing that. Look at that. That's kind of interesting. Where I get overlap, right? So I get an overlap potentially here. So I get an intersection between the lower parallel from the dominant 1, 2 with this median line, because if I've got a corner pocket here, I've got an 80% probability of getting to the median line. Do you see? It's just over and over and over again. So this is a lot. This is what my charts look like. But you know, I've been doing this long enough. I'm not confused by it. I know what I'm looking at. And so my expectation is here that this, if it's going to come down and play as a 4, this is where I'm looking to be a buyer. And no need for me to go beyond that, because I'm operating on the assumption that I'm going to pivot on the median line trading principle number 1, and then I'm going to be here at a fib relationship high probability zone for a fourth, in conjunction with the Elliott pattern. And here's my target. Now there's 3.5 to 1. I want to tighten it up even more. There's 6 to 1. Do you see that? That's just putting all the pieces together. And that's, sorry guys, that's the work that's involved in doing. If you want to be a trader, that's the work that you've got to do. And you've got to do it exactly the same way every time. That's the key to it. All right, how am I doing? I'm 17 minutes. All right, I'll wrap it on that here. I had one more I was going to show you, but I don't want this to go too long. There's 17 minutes there. I'll wrap it there for today. Okay, guys, that's it.